Hi, and welcome to our next session of Venture and Capital interviews. Today I have Monik Kotecha, who's the founder, or one of the founders of Insync Funds Management. And, you know, Monik was recently on our, on one of our sort of, I can't remember which event it was, with our Venture and Capital interviews where you were on our panel session.
It was the small cap showcase where we,
Yes. And look, I really, you know, so for me, when I see interviews like that, I always think, I want to dig deeper into some of those areas that you were discussing and some of the areas that you were talking about. So to get started, let's go about sort of a bit of your background and then sort of talk about the sort of foundation of Insync and then what you're looking at from an investment methodology perspective.
I'm a very young 54-year-old and interesting history. I was born in Kenya, in Mombasa actually. So I was actually born close to the beach, which is now why I live in Sydney, because I think that's really important to me. Obviously, it's part of my DNA. And I lived there for 6 years. Still have a lot of family there. And we moved to the UK. And I lived there for about 21 years. That's where I had my formal education. Went to uni, did a master's, and then got my first job there in funds management, which was with a big sovereign fund called the Abu Dhabi Investment Authority, or ADIA. And they're the largest sovereign funds in the world. They were back then. They certainly still are today.
I was going to say, what size were they then and what size are they now? Must be a significant difference.
They keep that pretty close to their chest, so it's not something that's publicly disclosed. But you know, I'm going to give you ballpark numbers. They'll probably be managing, I don't know, anywhere between 750 billion and $1 trillion today, if not more.
Yeah, wow.
Okay, so it's you know, very professional organizations. Had offices in London and in Abu Dhabi. So I was in the London office. So I started off as a junior analyst there. Worked there for a number of years, 3 years, and then we always had our eyes set on coming to Australia at some point. There's another story there which I won't go into today. But Bankers Trust, which was probably back then the preeminent financial institution in certainly from funds management perspective, not only in Australia but globally, but based in Sydney, we're looking for someone with my experience. You know, someone who's on the ground in Europe, you know, looking at stocks. They wanted to bring them to Australia to be part of the international team, and I was very lucky to get that opportunity. So I moved here in '94, worked with them for about 6 years, worked for them out of here and in the New York office for a period of time. I managed some international funds. It was a European equity fund, a global small cap fund. So I have a lot of exposure to smaller companies as well as larger companies, and sat on the asset allocation committee. And then in the late 90s, when Bankers Trust went through a major transition, I decided to stay in Australia. So I joined a local outfit here called Investors Mutual Limited, which was a startup at the time, became very successful. Within 7 years, they increased their funds from about 70 million to about $6 billion when I left. And then in 2009, I decided to start my own business in partnership. This is where
what timing, right? Was it the start of 2009 or sort of late 2009?
No, it was just after the global financial crisis. So a very, very difficult time in some respects to start a business, because obviously...
I know that well, because that was the time we started WI.
Perfect. So you totally understand, Steve. It's very... We probably had a similar journey, but in slightly different areas. So, you know, I enjoyed global investing. I felt that we could do something that was a little bit different, bring it to... Well, not only local investors, you know, we got global reach. We're talking to asset consultants out of the UK and global institutional investors. But really, I felt that we could do something a little bit different, better, use our combined experience to create a process that was world-class out of Australia. And really, I think the most important thing was, that's all fantastic, but it's what I love, okay? It's my passion. You know, it motivates me. I'm very lucky. I wake up every morning and I always get excited. Like, there's never a dull moment in the markets and certainly the global markets. And particularly today, I think with the changes that are occurring, we can come to that shortly. But with the changes that are occurring, I find that intellectually stimulating. And so what we use is we combine that intellectual challenge with our discipline know-how, bring the two together. And that's what excites me. It's about creating a really, we're very proud of it, a portfolio that, our clients can benefit. I mean, we're all invested in our funds, but our clients can do that as well. So that's a very quick history of myself, Steve.
Perfect. Okay, so let's get into some of the philosophical part, right? So the first part that sort of caught my attention is you've got three key areas that sort of really interest you from how you're looking at opportunities. So disruption's one, global mega trends is the second, and then you've got future focused, right? So all three of those appeal to me at a WI level, right? As far as I understand, they're sort of also the areas that we're thinking about and that we're interested in. So on the area of disruption, how do you look at it? What do you perceive as disruption, and what are you specifically looking for in disruptive companies?
Absolutely. So as you said, that's one of the three core tenets of our process. So look, disruption has always been important whenever you're looking to build a new business, or if you've got an existing business. When you're looking at competitive threats out there, you always think about disruption. The big difference today is that disruption is not just another factor, it is one of the key factors. Things are moving so quickly because of the major disruptive forces out there, and that's actually really impacting every single company, every single industry, and every single person out there. And so it's really important, whether you're building a business or from our perspective, when you're running a fund and you're looking for the future winners, that you really understand it. And there are really three key driving forces behind that disruption. The first is that we've really been in an extended period of very low growth and low inflation. And that really makes it very hard for a lot of businesses to grow. And one of the notable features of the last 5 to 10 years is a lot of the existing businesses that have been around sometimes for many decades. You can look at the General Electrics, to the BMWs, even the Procter & Gambles of this world, that really have dominated their areas, have really been challenged because of the low growth and low inflation environment. They've just been really struggling to work out how do they grow their business in a sustainable fashion. The second big driver of disruption has been the demographic shifts. Now, that's not just the aging population. Yeah. Whenever you talk about demographics, people go, "Oh, aging population," and absolutely, that is we do have an aging population, but we actually have it's almost a barbell demographic market at the moment. You've got people aging very quickly, but there's a lot of young people coming through. So if you look at
you can definitely see that in some, and I'll let you can definitely see that in a lot of the investment trends, whether it be the sort of meat-free companies that are sort of coming out, or even the focus on sort of ESG as an area. You can see a lot of that sort of driven by the sort of millennial investment trends, and even the health trends to an extent.
Absolutely, and we're actually exposed to some of those areas, so we can talk about that a little bit later if you want. But that's exactly right. So if you look at the millennials, so this is sort of, it's rough. Anyone born after 1980 is sort of a millennial or a centennial or a Gen Z, and there's obviously different terms depending on when you were actually born. But if you look at the population of the world today, it's about 7.8 billion, 7.7 billion people. And 4.4 billion of those are millennials and centennials. Okay, so centennials was anyone who's born, after 1998, 1999. And so their spending power is increasing. Yes, I know with obviously the COVID, that's created a few challenges for them in the short term. But when you look at the combining spending power, it was set to overtake that of the Gen X's, which is me. This year, okay, total spending power.
Wow.
And so that's an important fact to appreciate. And then alongside that, I suppose the things that I grew up with, the brands, the way I sort of transacted, the media that I watched, the services I was looking for, my tastes and my ethos and my philosophy about a lot of those things is fundamentally different from the millennials, okay? So their interests, their priorities, their consumer taste, all of those things are distinctly different. And so, and that's all happening now. So that's the second piece of the disruption piece. And the third one, which we all understand, but it's actually accelerating, is the technological disruption that we're obviously working our way through today. So we've obviously had, the onset of the internet, and now that's obviously penetrated mobile, which has now got high penetration. And the combination of those two has meant that business models have changed, and what consumers are now, the way businesses are now facing consumers, and the way they were selling to them and the way they were providing services to them have distinctly changed. And consumer tastes have also changed as a result, because, in the old days, for example, in consumer staples, you would go to the supermarket. That would be the only way you shopped. And you get exposure to that brands because of TV. That will be the only there'll be radio, but that'll be your major medium whereby you get exposure to brands. So the big brands will promote their products, and then you go to the supermarkets, you buy the big brands, right? Today, we know that people now stream. There's a variety of streaming platforms out there, so it's very fragmented. And the new consumers do not have the same association with those brands as a result of their technology. So new business models are now able to be created on much lower cost base, lower infrastructure, that obviously creating that opportunity. Social media is lowering the cost of getting access to your customers. You don't have to pay those big dollars like you do on TV to be on Facebook, Instagram, and some of the other media platforms. So there's a lot. So consumers are now getting exposure to a lot more brands out there, and that's disrupting all of those old businesses out there. So technology has been a massive headache. If you're a Procter & Gamble or one of the, you may have a massive Oracle-based infrastructure technology system in place. You've got distribution platforms around the world. You've been using TV as your main mode, and in a very short period of time, the world has been turned upside down, right? So you've got hundreds of thousands of people who are facing one way, doing things a certain way, and suddenly the world is shifted very quickly into the other direction. So what's happened now, which is probably one of the most important takeaways of this disruption piece, is that the adoption process for new products and new services has compressed so significantly now. So, what used to take 8 or 10 years for a new product or new service to get access to 50 million customers. So if you think about airplanes to credit cards to Facebook, all of those things, as you had those things coming through, you went from 30 years to 15 years to 8 years for Facebook. Pokemon Go reached 50 million customers in 8 days. Okay. Yeah. So now, if you're a General Electric out there, it's all happened too quickly, right? So there's all disrupt. So that's why it's so important. From our perspective, it's important because we want to make sure we're not in yesterday's winners, which we're thankful a lot of our peer group are. They keep looking at yesterday's winners thinking they're going to come good. But because we're so intensely focused, we believe that by having that as one of the cornerstones of our process ensures that we avoid yesterday's winners and we're focused on tomorrow's winners, Steve.
Now, as a perfect segue, help me understand what you see as the key global megatrends going forward.
Well, there's so many, to be honest with you. So I think the most important thing first is, which is why we think it's so important, is to focus on megatrends, right? And why do we do that? And I'll answer your question. But I think it's important to first lead into that. So the megatrends are important because we're in a low inflation, low growth environment. Okay, so buying stocks that are sensitive to the economy is not going to be a successful way of investing. Okay, so what megatrends do is they provide a clear beacon to the future, and in an uncertain world, that's what a megatrend does. Okay, and a megatrend has a number of key characteristics to it. So it's mega, so it's very large. Okay, so it's large today, and it's going to get very large in the future. So you've got that tailwind of growth coming through. The second thing is it's a very durable mega trend and almost unstoppable. You can almost set your watch by it. So a very obvious mega trend is at a very high level would be the aging population, right? I mean, that's
I thought you were going to say electric vehicles.
I'm coming to that. So and we can talk about that if you want a little bit more, but certainly, so that's a very obvious high-level megatrend. But you can't just make money out of saying that, so you've got to sort of dig to the next level down. And so the next level down is saying, well, the move to the cashless society, for example, has been a mega trend for a period of time now. All right. But cash is still being widely adopted. But what COVID has done is accelerated that trend even faster. So the penetration of cash is still very high, but it's coming down very quickly. And now we're moving towards moving faster towards the cashless society, contactless payments, online payments. That is a very, very clear mega trend. Okay, it's unstoppable. That's just going to keep charging forward. I don't have to sit there worrying about the shape of the economic recovery going forward. When I'm invested, which we are in the payment space, I'm confident. We've done a lot of work. We collect a lot of data from lots of different sources to corroborate what the size of the market is likely to look like, what the growth rate is going to be, and what are the businesses that are participating in the growth rate in that mega trend. So that's the beauty of mega trends. They're unstoppable, they're highly durable, and they're very large in size.
And when you say mega, are you talking 1 decade, 2 decades? What are you?
Well, some of them are, look, for us, it's got to be at least a decade.
Yeah.
Okay. That gives us a very clear runway of growth in the businesses we're invested in. But some of them are multi-decades, absolutely. I mean, the cashless society has been a 15-year mega trend, and we're nowhere near completing that. And now we've taken that to another layer, which is it's not just using credit cards, but now it's using your smartphone to make contactless payments, right? So that's accelerating. So that's the
and when you look at those mega trends, are you also looking at, like, for example, I'm going to go back to electric vehicles, right? And and only reasons in my head is I watched all the sort of footage around the sort of battery day with Tesla, right? So if you think about that as an area, if you think about electric vehicles, are you then sort of breaking down each of those areas and saying, okay, well, this is the mega trend. What are all the other components that are going to be, say they're all rising tide lifts all boats, right? So what are the other areas that are going to be lifted or going to be called upon as part of this mega trend? And how do you sort of break down who are likely to be the winners and losers sort of in those areas?
Absolutely. So there's a couple of key aspects to appreciate around that specific mega trend. So that's right. We would look at that and we would think about where are we on that journey of the mega trend, and we're still at the early stages of that mega trend. So the opportunity there is that there's a lot of exciting new technologies and companies that are coming to the market that are going to benefit from the different ways of participating in the mega trend. So that's the big positive, Steve. From our perspective, we tend to invest when the mega trends becomes a lot more established and it becomes a lot clearer as to who the winners are going to be and who the losers are going to be, because you absolutely want to avoid that. And the reason we do that is because when you invest in a mega trend very early, there's usually a lot of competition. It's not very clear how the mega trend is going to unfold, and it's not very clear which battery technology is going to be the winning technology, for example, right? And therefore, it's not very clear, is it going to be Tesla that's ultimately going to win, which is what everyone is sort of betting on at the moment? Or is it BMW or GM who've got very deep, or a Volkswagen rather, VW, who've got the deep resources, who were caught short because of the disruption. It happened so abruptly and so quickly. They're facing still towards combustion engine cars, and the world started moving very, very quickly the other way. But they do have very deep pockets to pivot, right, and potentially be a threat to Tesla in the coming years. So for us, the challenge is that it's probably a bit too early to establish the winners and losers, whereas when it becomes a little bit more established, we can see that the megatrend still has a lot of durability to it. We've still got 10, 15, 20 years to work through, but we're now starting to work out, hey, we work out the winning companies, and we know that investors tend to undervalue two aspects when it comes to valuing these listed companies that are participating in these megatrends. They underestimate the durability of growth, and they underestimate the acceleration in growth that's coming through, right? So I'll come back to electric vehicles in a second, but if you look at the online payment space, investors have appreciated the move to the cashless society. And two beneficiaries of that have been Visa and MasterCard, right? I mean, if you want to make a payment today, in any payment process, typically one of those two companies is still a feature of it, okay? So they're very much embedded into the payment infrastructure globally. And people say, well, everyone knows that, and yet the stocks keep on performing very, very well. And the reason they do that is because they underappreciate, as I said, the fact that this trend is going to keep on growing, they underappreciate the earnings and cash flows that are going to emanate from that trend, and they underappreciate the acceleration. Now, COVID has accelerated the growth towards Visa and MasterCard because they're also participating in the contactless world alongside PayPal, right, which is a big beneficiary. You've got Square and you've got a number of other players. So, but the great thing there is we can find highly profitable businesses. That's one of our three key pillars of investing. It's not just the mega trends, but it's finding really profitable businesses that can participate, that are in a really good position to profitably benefit from those secular mega trends that are coming through. So coming back to the electric vehicle space, that is something we're keeping an eye on, right? Because we don't know what sort of fuel is going to be used. I mean, hydrogen has been spoken about quite extensively, and we're starting to do a bit of work around that to see if we can find beneficiaries, because that could be, I mean, an absolute hundreds of $1 billion worth of market going forward. And then, but the problem, as I said, is that it's really hard at this stage to work out who the winner is going to be. But one company that we have in our portfolio that's actually we think is going to benefit from electric vehicles and particularly the move towards autonomous cars. And we need 5G to really be up and running, which is starting to happen now. So we can see the acceleration happening. Is you need to have the right chips in your cars that can connect the car with the network, with all the other cars that are traveling on the road, okay? So we own a business called NVIDIA, which is a leading player in GPU chips, okay? Intel's a leader in CPU. CPUs is what goes into your PCs. GPUs is what goes into machine learning. It's required for Internet of Things. It goes into all that really cool gaming that everyone loves to participate in. That's actually age agnostic. You get 40, 50-year-olds playing with as much excitement as a 15-year-old today because the gaming graphics are just so extraordinary. But NVIDIA...
Just on that gaming, right, just as a side note, and I was speaking with a company that we're working on a relationship, and, they've got 40 million users, and in their user base, their clientele are 35 plus. I can't remember, it was like 60% have kids and so forth. And I was like, I couldn't believe the demographics of the gaming users that they had. Anyway, it's just an interesting side note.
It is. And the beauty of the company that we own, and this is one of 30 companies we own, we have 16 global megatrends and we own 30 companies across those 16 global megatrends. And the beauty of NVIDIA is it's not just exposed to the gaming megatrend, which is now accelerating, right? And it's accelerating not because of only the great games, but I listened to my son play, and he's talking to about 10 other people. One game, right? So it's almost like it's turning almost into like a platform type of business. It's like a Facebook or an Instagram or one of those. It's a platform where it's bringing users together, and they're using it as a way of not just entertaining themselves, which is fantastic because entertainment is growing ahead of GDP. That's a mega trend in itself. But it's also enabling what we all love to do, which is to communicate. We love to engage, right? The COVID has restricted us, and what gaming has done is enabled everyone to socially engage and have a lot of fun. But the great thing about NVIDIA is playing multiple mega trends. So they're involved with data centers, they're involved with gaming, and and this is coming to your question, how do we participate in that electric vehicle space? But from our perspective, we can see a lot of great companies coming to the market, but we can't quite work out at the early stages who the winners and losers are going to be because a lot of them are loss-making. But we know that NVIDIA is definitely going to be one of the winning companies. So that's how we're participating in that mega trend.
Okay. Now, in a sort of final question, I will say now we've talked about online payments. We've talked about sort of the sort of mentioned NVIDIA as a company in regards to their sort of graphics, their GPUs and so forth. So I didn't describe that well. But for you, what do you sort of final question? If you're speaking to an investor and what are you highlighting as the 3 to 5 key areas to keep an eye on, and maybe even some 3 to 5 key companies to keep an eye on over the next 5 years, because they are so well entrenched into that and they are considered the sort of leaders in those mega trends?
Okay, that's a great question. So we've actually got 16 areas that we're really excited about for the next 10 years. Okay, so the great thing is that gives us diversity. So we're not, so if we get one mega trend wrong, we know the others are working very, very well. Some of the some of the largest mega trends to us. Clearly the aging population continues to be an enormous one. So if you look at it, we're now moving away from a situation where the way to treat the way to treat people is very antiquated. It's very expensive. You get patients that don't adhere to the protocols that are around, and we're moving to an environment. We're now moving towards personalized medicine now, because what's happening now is that technology is getting so good that they can actually pinpoint Steve Torso or Monik Kotecha and say, I know exactly what your problem is. They're using your smartphone and remote access to treat you. So you're not using the expensive hospital system. So it's bringing down the cost of healthcare and giving you a much more personalized report of what you need to do. Because for us, health is the number one thing for everybody, right? And as you're getting older, we want to live for longer. And so we're really excited by that space. And there's a number of different ways of getting exposure to it. The way we've got exposed to it is through pharmaceutical companies that are treating chronic diseases, because chronic diseases is what kills people. And because of gene technology and because of the speed with which they can create new drugs now, there's some exciting unmet needs that these new pharma companies are coming through with, all the way to medical device companies. So we own a company called Stryker, for example. And if you look at an aging issue, hips and knees, they start giving way. You can't do anything about it as they get older. It's just a age-related issue. And what Stryker have done is they've got involved in robotic assisted surgeries. So what they do is when they get inside your knee, you still need the surgeon, right? Really important. But what happens now is the outcomes are much more superior with the assistance of a robot to help them actually create a better outcome for you. So you get much better results.
I've actually experienced that with my wife. My wife had a thyroid cancer that they had to remove. And she got the surgery done, and it was incredible. The minimalization of scarring, the efficiency of the process was just really, really interesting.
Absolutely. So that's one area. The digitization is another big area for us. We're all going through a process of digital transformation. Us individually, we have to digitally transform all the way to the large corporates. Okay, so they're spending hundreds of billions of dollars. We all are, in quickly transforming ourselves into the new digital framework. So businesses that are exposed to the digital framework is going to be a fantastic area to keep on investing in. Okay. Now the third one I'm going to provide is a little bit left field. Okay, but our love of pets continues to increase. Okay, it's a massive mega trend. And if you looked at it, so there was a mega trend that was growing in high single digits. The amount we were spending on, all the way from buying nice furry coats for dogs to organic food to getting them tested to give them medicines and vaccinations. It's an expensive process, and again, it's age agnostic. Young people and older people love pets, and we're increasingly treating pets the way we treat humans. Okay. And during COVID, interestingly, a lot of areas suffered in terms of lower expenditure. Pet spend actually increased by 25% in Australia during this. Okay. And so, again, this is the variety of mega trends that are out there. Some are obvious.
Interesting.
Some are less obvious. And we've got a couple of companies exposed to that area. One is the leader in providing medicine and vaccinations to the animal and pet care market, and the other one is actually providing all the diagnostics, the scans that are necessary. And and it's a very expensive process. I just spoke to a friend of ours, and she had to get some medication for her dog, and for about 6 courses, that was $180, right? And
it's amazing what people spend on their pets, like literally just spend thousands on sort of, whether it be surgery or whether it be sort of just recovery, or even just sort of trying to keep, like I said, I've got a family member who, as you said, treats their pet like a human and sort of gives home cooked meals, like really, really going all out.
Absolutely. And just to give you one final example, and I can give you so many more, but I know you wanted 3 or 4. One final interesting one is, I don't know if you've noticed, but we're obviously spending more time at home, and I think we're all doing a lot more exercise. When I go for a walk, I'm just amazed how many people are walking around, all shapes and sizes. But I think what the COVID has done has sent a jolt through everybody about the appreciation about maintaining their health. We always knew that, yes. But I think clearly there's a clear linkage between good health and how you cope with a pandemic. And the view there is obviously this is one of possibly many pandemics to come now. And so, we realize the importance of the healthcare infrastructure now, and there's a lot of money that's going into that. But also, we're now looking after our health a lot more. So we're spending a lot more on buying clothing and footwear and the right type of equipment to ensure, and we're doing a lot more research around it. And so that was already a pretty good trend pre-COVID, and we've seen that trend actually accelerate. So we've got good exposure to some of the companies that are benefiting from what we call the athleisure trend. So it's athletic and leisure.
Understand.
So we're walking around now, it's not just suits and ties. People in the office in different wear, but what they wear, they think about the quality, the technical aspects. So anyway, there's another example. And again, that's at multiples of GDP. That's really important. And
so the 4 areas we've talked about, the personalized healthcare, digital infrastructure, you talked about pets, and the fourth one, just escaped my head.
Athleisure.
Athleisure. Okay, interesting. Well, look, I think it'd probably be, let's sort of finish it there, but Monik, I really enjoyed the session, and it'd be great to sort of delve into some of the other areas that you're looking at as sort of global mega trends, because to me, it is fascinating when you have a look at sort of human nature and how it has, like what you said, it's more sort of accelerated because of COVID. It's not much change, but just accelerated. And for us, that's what what I love about what we do is I love discovering the companies that most people sort of see 5 years from today. And, and same thing as well as, like, I'd love to bring them the ideas of the thinking that because this is your job, right? You spend all day thinking about this, looking at the companies, analyzing and trying to understand it. So yes. I would love it if we can sort of delve deeper into sort of future discussions. And, I'd love it if the investors are sort of watch this, think, interesting, because 5 years from now, you could look and go, okay, well, that was, those of the observation of those trends were already present, and the watching of it unfold is really, really interesting.
Look, it will be an absolute pleasure to do that. So,
brilliant. Well, Monik, thank you so much for your time today. Really appreciate it. Now, if people want to find out more about Monik's fund, they can go onto the Insync website. They were recently rated Money Manager's 2020 Emerging Fund Manager of the Year, which for me is, I think, quite a prestigious award to get. So I recommend, go onto their website, subscribe, and sort of learn more about the way they're thinking and sort of learn more about their fund. Brilliant. Thanks, Monik.
Thank you, Steve. Absolute pleasure.